Hey everyone, and welcome back to another portfolio update. So unlike last week, this week was actually a pretty good one for the couch investing portfolio. It's up 5.39% compared to the S&P 500, which was up only 1.49%. Now year to date, this is the performance. We're up 7.29% while the S&P is up 4%. And since we started the portfolio, we are up over 70%. More specifically, we're up 71.3%. While the S&P is up 22.74%. Now, of course, as you know, I entered 2025 with the idea of 25 being the year of the contrarian trade, which is why you're seeing Alibaba in it, which is why you've seen Pinduoduo in it. Uber, I opened a position in that. I recently opened a position in Advanced Money Destroyer as well. So yeah, there are some positions where you might ask, oh, what kind of ridiculous portfolio is that, right? Well, so far, it's working out, right? At the end of the day, it's me doing or making those decisions because I think it makes sense. I also want to touch back on something that I said in my last SoFi video when talking about SoFi and Robinhood and people saying, oh, SoFi is trash because look at Robinhood that has gone up quite a lot and SoFi not so much, even though SoFi is up close to 100% year over year. But the thing here is that you're not competing against other stocks. That's very important for me to basically send that message. Your goal, especially if you buy individual stocks, your goal is to basically beat the market. If you can do that, then you should be fine. You shouldn't be losing sleep on, oh, I should have bought this stock or I could have bought that stock and I would have been up another 50% or another 100%. No, remember, your goal is to beat the market. If you don't want to beat the market, then just buy the market, buy the index, and that's about it. But to say that, oh, I bought SoFi, I should have bought Robinhood, or I bought this, I should have bought that. You're not going to get far like this. You're just going to create struggles for yourself because you're going to try and change your portfolio every single time. Every time we have a bull market, every time people start posting gains from their positions, whatnot, they're up 50% year to date, 100%. You're going to feel and say like, oh, I suck as an investor because I could have been up 300% if I bought that stock, but I'm only up 100% because I bought this stock. No, compare yourself to the market. If you're still beating the market, you're still doing an amazing job. Much, much better than the average. Much better than that, okay? I also want to touch on something else, which is basically this from Warren Buffett. When forced to choose, I will not trade even a night's sleep for the chance of extra profits. Which basically goes back to what I just said. This means, if you don't understand it, this means you're already making profits. He is not willing to lose a night's sleep for some extra profits. Don't be greedy. There's a reason why that saying is so popular, right? Be greedy when others are fearful and be fearful when others are greedy. Also, when you take profits, nobody became poor when he took profits. I took profits, I sold off positions when I was up quite a lot, 50, 100, 300%. Could have been up more, right? I always say that with my Nvidia stuff or even Palantir more recently, could have been up another 40%, 45% or so. Yeah, could have. But was my performance good? Of course it was good. It was incredible. Beat the market and then some. But yeah, I could have gone more. I could have gotten more. But so what? My goal is to beat the market. And I beat the market quite comfortably. Of course, in a bull market, everybody's a genius, right? Everybody's a genius. In a bull market, it's usually when things go bad, things go down, that's when investors really get tested. So far, so good. Now, going back to the portfolio, a contrarian trade for the year, even though there are some positions there where I think it's not really that much of a contrarian trade. For those that are also new to the channel, I'm currently in Belgium. I'm from Belgium, born and raised. We currently do not have any capital gains taxes, which means I can go in and out of positions, not options or stuff like that, but shares, stocks, I can go in and out. I don't pay any capital gains taxes. That might and probably will change in 2026. I think we'll pay around 10% or so. The first $10,000 you don't pay, but afterwards it's 10%, which to be honest is really not that much. So full disclosure. One extra thing here before we jump into the portfolio overview. I started investing in 2016. I have a core portfolio. This portfolio started a year ago. So obviously I have another portfolio. The core portfolio is pretty simple. It's basically a portfolio that I don't touch. So it's not that interesting. It goes as follows. It's Tesla, Amazon, Meta, Alphabet, Google, Mercado Libre, and PayPal. That's basically the majority, the large majority of the portfolio. And then I have some smaller positions in the likes of Airbnb. So that's about it. I usually don't change the structure of that one. This one, the public one, I can change in and out again because I have that advantage also of no capital gains as of right now. So yeah, I've made some changes, of course, to this portfolio. So let's see what has happened in the last week. You can see the overall performance of the stock. So SoFi is the number one here, up 107.8%. PayPal number two. I still think that this one will destroy the market when the market will figure out that, well, they're buying quite a lot of shares and that it's priced for close to zero growth yet again. Of course, we have the investor day, I believe February 25th. I think that's when they, well, hopefully we'll be talking about the future of the company, the advertising side of the business, how they plan on growing that side, e-commerce, and of course, stablecoin. I would really surprise me if we are not over $100 this year. Then position number three is Google Alphabet, up 18.19%. This has come down a little bit, so I will probably continue to add more to that position, even if it's the number three position in the portfolio. Then we've got Tesla up 97.57% in that portfolio here. In the other one, I'm up way more than that because I started buying in 2019. Great timing, but calm your expectations. I didn't really have that much money back in 2019. Now, here with Tesla, not gonna lie, I took some profits when it was over $400 because, well, it just didn't make much sense for me in this portfolio. Then number five, we have Intel. Yes, I have Intel in its number five. Now I'm down 5%. I was break even when it was above 24, close to $25, down to now 5% overall. I think Intel will be fine. Rocket Lab is number six. I'm up 548% on that one, so great performance. Here is one of the contrarian trades, also Uber, already up 23.78%. Alibaba up 44.5%. Okay, this one to me was a no-brainer. Of course, people have been saying that Alibaba is cheap. The Chinese stocks are cheap for years and years. I said at the end of 2024, I think despite Trump being president, and I've shown you the track record of these Chinese companies, even back in 2016, when Trump was also president and there were some tariff talks and all of that, they performed well. And so I'm not that surprised to be in the green, but I'm surprised I'm already up 44.5%. Of course, Alibaba, I think this week they'll report earnings, so we're going to cover that, but I'm already very, very happy with that performance. Then I've got Micron at number 9 here, up close to 9%, where we were at $100 back again, but that didn't hold. But I think Micron will also be an amazing performer in the next couple of years. D-Local, now I'm up 31.82%. For a while, I was down on that position, but in the last couple of months, this thing has gone up. It's a profitable company, small market cap, growing extremely fast. Yes, it's emerging market, so there is a bit of risk to that, but I still think that this one will be one to watch. Will it get acquired? Hopefully not. And if yes, I do hope they're going to ask for a big premium. Then we've got here Meta. I have it in my core portfolio. I have it here just for these types of anchor stocks, let's call them, up 67.6% on that one. Then I've got some cash. Disney was one of the newer positions. I know, quite boring, but again, I do want some stability in this type of portfolio. I bought some Disney. I'm already up 1.8%. I'm still building out that position. And then we've got Transmedics. Transmedics, I'm now basically break even. With Transmedics, I'm sure they're going to grow quite fast. I'm still on the sidelines whether or not I want to keep it, yes or no, for the long term. Same with Celsius, even when I'm down close to 50% on that. I know some people will say, oh, why not add to Celsius? You're already down 49%. Well, I was told the same thing at $30. Why not add? You're already down. Well, like I said, I'm only going to start to add to Celsius if I feel that growth is going to reaccelerate, if we get the message that, well, inventory issues are over and Pepsi is starting to order back, then I will probably start buying more or just sell at a loss, maybe a less of a loss. Let's see. I'm very thankful that these are just smaller positions, so the hit is not that big. And then we've got Upselera. It's a small bet, 1.6% of the portfolio. If it works out, great. If it doesn't, it doesn't. I'm down 15.38% on that. And then Owlet here, just 0.6%, also a bet. If it works out, it's a 10x. If not, then it's a 0. And then, of course, position number 15, I skipped this one actually, It's Advanced Money Destroyer. I made a video a couple of hours ago talking about my decision to buy that one. It's now 2.32% of the portfolio. I am green already on that, just 0.67% green on the Advanced Money Destroyer position. But I'm also building up that one because I think sentiment is just horrible or close to horrible with AMD. If you watch the video I released today on AMD, it was basically last year close to $200. AMD was the next NVIDIA. And today, AMD closer to $100. AMD is the next Intel. So yeah, another one for the contrarian trade. I like these types of things. Sue me. I like these types of things. I think when you can buy a great business where sentiment is completely horrible, the price of the stock has come down, but the business is doing well, great leadership, the future looks quite bright for the company. That's usually when I start buying these stocks. I've done this with SoFi, I've done this with PayPal, I did this back in 2019 with Tesla. Intel is the one which, well, took a bit longer than expected. Uber is one as well, Alibaba. So you get the picture. This is the type of guy I am. This is the type of investor I am. I like to do these types of things. It doesn't always work out, but so far, so good. In the last couple of days, what have I done? Not much, right? I only bought a little bit more of Micron, 15 extra shares, a 15% increase at $90.88. So yeah, not much has happened in the last couple of days. This is basically the watch list. I'm very, very tempted to open another turnaround story position in Lyft, because if you've watched my Lyft video, you might say, oh, but you already own Uber. It doesn't make any sense. Yes, it does make sense because it's also priced for zero growth. It's now profitable. It's growing. It has a play for autonomy. The market is just not realizing yet. So it might be one, but I think I will just stick with the ones I have here. Unless I sell, of course, Transmedics and Celsius, then I'll have more cash, might open another position, or I might just grow AMD and Disney for them to become larger positions in the portfolio. So this is basically it. And to be honest, I started the topic of this video by saying, oh, you should not compare yourself to others, you compare yourself to the market. I started this because I read a comment, I think 2 weeks ago on one of these videos, saying that, oh, you're only up 61%. And when I read that comment, I was like, what? I'm up 61% in 1 year and you think this is bad? And I was thinking to myself, why do people think like that? And then I started to talk with people, and we came to the conclusion that's because, well, people compare themselves to other investors, to other stocks as well, and not to the market. I was like, yeah, actually that makes sense. Well, it doesn't make sense, but it makes sense to make a video about that. And so, well, here we are. I mean, if you tell someone that being up 61% year over year is not good, then you're probably going to get burned eventually, because you're going to be extremely greedy. You're going to be chasing. I know Scooter, the song, the chase is better than the catch, but in this case, the catch is better than the chase. So all in all, that's about it. Hopefully you learned something from this video. I'm always learning. I will continue to make mistakes, but as long as my performance stays like this, where I can beat the market, it's quite comfortably, I will make mistakes. I could be making more money. Of course, you can always make more money in hindsight. I think we'll be fine. Just don't be greedy. Don't be comparing yourself to others and blah, 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 and blaming yourself for not picking the right stock that has gone up 100%, 200%, while you're still up quite significantly and beating the market. If you beat the market, you're winning as an investor. That's the most important thing here. So all in all, that's about it. If you enjoy this type of videos, hit all the buttons. We really appreciate that. And I'll see you all in the next one. Bye-bye.